Welcome back to Investing Talk Podcast. We're about to embark on another deep dive, meticulously crafted just for you. Today, we're tackling a question many of you have been curious about. Is TripAdvisor a good time to buy now? We've gathered a stack of valuable sources to unpack all the angles on this, well, fascinating travel giant. Before we dive in, if you're finding these deep dives valuable, please take a moment to subscribe, hit that like button, maybe leave a comment with your thoughts. And if you feel inclined, consider buying us a coffee. It really helps us keep these deep dives coming. Okay, let's unpack this. Looking at TripAdvisor right now, it certainly presents a mixed picture for investors. The stock is currently trading around $17.50, and while our sources suggest it's sitting at a fairly reasonable valuation, well, there are definitely some short-term technical warnings. They suggest caution for an immediate entry.
Yeah, what's truly fascinating here, and what really defines TripAdvisor's current narrative, I think, is its ambitious attempt to transform itself. It's moving beyond being just, a review platform, which is what most of us know it for. It's really striving to become an experiences-focused marketplace. Now, that vision definitely holds a lot of promise, tapping into a huge growth area in travel, but, and this is important, you need to be aware that this transformation isn't without significant execution risks and, of course, intense competitive pressures. It's a classic pivot story, really.
Right. So let's dig into the financial bedrock then. What's the financial health of TripAdvisor looking like these days? Are there any clear strengths that jump out from the numbers?
Absolutely. The company demonstrates pretty solid financial fundamentals, particularly when it comes to its liquidity and its ability to generate cash. That's key. They've built up a robust cash position, sitting at an impressive $1.154 billion. That kind of cash gives them significant strategic flexibility, which, as you can imagine, is crucial for a company undergoing a major transformation like this. We've also seen a really dramatic improvement in their net income. It climbed to $59 million in 2024, which is a big leap from just $10 million in 2023. And looking at their most recent quarter, Q1 2025, they showed continued momentum, $398 million in revenue and positive adjusted EBITDA of $44 million. And, EBITDA earnings before interest, taxes, depreciation, and amortization, it's a good way to see a company's operational profitability before financing and accounting decisions kick in.
Those numbers certainly sound good. Points towards a healthier bottom line for sure. But as we always say, every coin has two sides, right? Are there any potential red flags on the financial front? Things that might give an investor pause?
Indeed, there are. While that cash position is strong, definitely a positive, the elevated debt-to-equity ratio of 1.97 times does raise some concerns about leverage. It basically means the company is relying quite a bit on borrowed money compared to what shareholders have invested. Now, this primarily stems from a significant corporate event, the recent LTRIP merger transaction. LTRIP, or Liberty TripAdvisor Holdings, was the former parent company. This merger, completed back in April 2025, essentially simplified TripAdvisor's corporate structure, which is good. It eliminated dual-class shares, a positive for governance. However, it also came with a financial restructuring that increased the debt load. And that high leverage can certainly limit a company's financial flexibility, especially when they're trying to invest heavily in, new growth areas.
Okay, you mentioned that transformation, and this is where it gets really interesting for me. TripAdvisor operates on a three-segment strategy now. It's not just one monolithic thing anymore. So how are these different parts of the business actually performing? Is it a uniform story across the board, or?
Oh, far from uniform. It's really a tale of divergent performance, and understanding these segments is absolutely key to understanding the company right now. The brand TripAdvisor segment, that's their core platform we all know for reviews and meta search, well, it actually saw revenue decline by 8% year over year in Q1 2025. It came in at $219 million. And this reflects ongoing challenges in traditional meta search and advertising. They're facing, frankly, intense competition here, particularly from giants like Google Travel and also direct booking platforms, which often capture users earlier in their travel planning journey. It's a tough spot for that legacy business.
So the core is struggling a bit then, but you implied there's a brighter spot, a real standout performer in the mix, right?
Yeah.
Absolutely, and then this is where the excitement for TripAdvisor really lies, I think. Viator, their experiences segment, is the clear leader. It's their strongest growth engine right now. It showed robust 10% year-over-year growth, hitting $156 million in Q1 2025. Now, this segment is directly benefiting from a significant secular shift toward online experiences booking. You see it everywhere. Travelers are increasingly looking for unique activities, tours, excursions, and they're comfortable booking these online now. Viator is, perfectly positioned to capture that growing demand. And we can't forget TheFork either, their dining segment. That also achieved solid 12% growth to $46 million. This demonstrates real strength. particularly in the European dining market, showing diversified growth beyond just experiences.
That's a fascinating split, a declining core but strong growth in experiences in dining.
So what does this all mean when we look at the broader, highly competitive travel industry? Does TripAdvisor still have strong competitive advantages that can hold up against these pressures, or is it getting squeezed? Well, they certainly have some formidable competitive advantages that have allowed them to endure. Let's be clear on that. Their most significant asset is arguably their market-leading content database. I mean, we're talking over 1 billion user-generated reviews, covering more than 9 million travel-related entries. That's an unparalleled treasure trove of information. It's incredibly hard to replicate. They also boast trusted brand recognition. I mean, they consistently rank as the #2 most visited travel site globally, right after Booking.com. And their platform is unique in how it comprehensively combines reviews, booking capabilities, and that experiential content.
But it's definitely not an easy road for them, despite those strengths. We hear a lot about the big players dominating online travel.
No, it's far from easy. You're right. The competitive landscape is intensely challenging. TripAdvisor faces substantial pressure from much larger, much better resourced players. Think Google, Booking Holdings, Expedia Group. These competitors operate on a completely different scale. They have significantly higher market capitalizations and, crucially, marketing budgets. Google, in particular, with its superior data and integration capabilities. Well, it's seen by many analysts as posing an existential threat to TripAdvisor's traffic and monetization. And this isn't just about losing clicks. Google's integration of travel services directly into search results means they capture the user at the very beginning of their journey, often before they even consider navigating to TripAdvisor. This effectively disintermediates TripAdvisor from its traditional role as a starting point for trip planning. It forces them to find new ways to attract and monetize users. It really challenges their fundamental business model.
That's a powerful point about Google's impact. Got me something to watch. Let's talk numbers then. Given all these dynamics, at $17.50 a share, what do the valuation metrics tell us? Is TripAdvisor a good deal compared to its peers, or is it maybe fairly priced considering these challenges and opportunities?
Well, when we look at the current valuation multiples, TripAdvisor actually appears to trade at a, let's say, reasonable discount compared to its online travel peers. For example, its price-to-earnings ratio, or PE, is 35.0 times on a TTM basis that's trailing 12 months. This metric shows how expensive the stock is relative to its profits. Their price to sales is 1.13 times, price to book is 3.21 times. These are all metrics that, when you compare them to the broader industry, suggest a slightly lower valuation. What's potentially attractive right now is their free cash flow yield. Based on annualized Q1 figures, it appears quite high, around 16%. Now, free cash flow is the cash a company generates after paying for operations and maintaining assets. A high yield can indicate a stock is undervalued, but it's crucial to remember this metric can be quite volatile quarter to quarter. Don't hang your hat just on that. The discount probably reflects the market skepticism about the brand TripAdvisor turnaround and, frankly, the execution risk of their big pivot.
Okay, that gives us a good picture of the fundamentals and those competitive forces. Now let's switch gears a bit to the technical side of things. What does the stock's recent price action and the key indicators suggest for someone maybe considering an immediate entry into TripAdvisor shares?
Right. From a purely technical standpoint, the setup suggests caution for immediate entry, at least in the very short term. While the overall trend for TripAdvisor has been constructive, it's recovered significantly, surging almost 68% from its 52-week low back in April 2025 to reach $17.50. It's still about 6% below its 52-week high of $18.66. The Relative Strength Index, or RSI, is currently at 73.0. For those unfamiliar, RSI is a momentum oscillator, and a reading above 70 typically indicates overbought conditions. This suggests the stock has risen very quickly and might be due for a pause or even a small pullback in the near term. Now, on a more positive note, the MACD, that's moving average divergence, another momentum indicator, it shows bullish momentum with positive divergence. And the stock is trading well above all its major moving averages, the 20-day, 50-day, and 200-day. So the longer-term trend looks strong, technically speaking, but short-term, it's a bit stretched.
It's stretched on the short-term indicators. Okay, what about key support and resistance levels that our listeners should be aware of if they're watching the charts?
For support, that recent 52-week low of $10.43 is a very strong historical support level to watch. Immediate resistance, the sort of first hurdle the stock needs to clear, is around $17.80. And then the key resistance level to really watch is its 52-week high of $18.66. Breaking through that would signal significant bullishness.
Got it. Beyond just the numbers and the charts, what significant corporate developments or news have been impacting TripAdvisor recently? Seems like they've been pretty active.
They certainly have. A major development was the successful completion of that Liberty TripAdvisor Holdings acquisition in April 2025. We mentioned the debt impact earlier, but this was also a critical step in simplifying their corporate structure, eliminating those dual class shares that can sometimes, complicate governance. It generally enhanced management's strategic flexibility. It made them a cleaner, more streamlined company overall. Another really important point, especially in today's tech landscape, is their accelerated integration of AI across their platform. They've announced partnerships with companies like OpenAI and Perplexity. The goal here is to enhance trip planning capabilities. I mean, think about it. Using AI to sift through those billion-plus reviews and custom-build itineraries or recommend experiences tailored to an individual user. This aims to better position them in the evolving travel discovery landscape, potentially giving them a unique edge against competitors who rely more on, say, traditional search methods.
Interesting move with AI. And what's the general sentiment from Wall Street analysts on TripAdvisor? Are they largely bullish, bearish, or somewhere in the middle, given all these moving parts?
Yeah, the consensus rating among analysts is squarely in the hold camp. That really indicates a fair amount of uncertainty. Breaking it down, we see 2 sell ratings, 9 hold ratings, and just 2 buy ratings. So not exactly a ringing endorsement. The median price target among these analysts is $16.92, which interestingly implies a slight downside, about 3.3% from current levels. However, it's worth noting that the target range is quite wide. It spans from a low of $11 all the way up to $24. That reflects very differing views on the company's prospects. While some firms have cautiously upgraded their ratings and raised price targets after the Q1 earnings beat expectations, most are maintaining neutral ratings. It signals they're really waiting for sustained, tangible improvement in the core business and clear evidence that the strategic pivot is actually gaining traction before they get more positive.
Okay, makes sense. Looking forward then, what are the upcoming catalysts that could really impact TripAdvisor's stock, both say in the short term and maybe over the next couple of years? What should our listener be watching for?
Good question. In the short term, Q2 2025 earnings, expected around August 5th, will be a critical test. It'll show us the strength of summer travel demand and, more importantly, Viator's growth sustainability. Management's guiding for 5-8% revenue growth overall, so we'll see. The overall summer travel performance data will also provide crucial context for the entire industry, not just TripAdvisor. Longer term, the expansion of the global experiences market is a massive tailwind. This market is estimated to reach $365 billion by 2028. That presents a huge long-term opportunity for Viator to continue its strong growth trajectory. That's the bull case. The successful implementation of their AI-driven transformation, if they pull it off, could significantly differentiate their platform, maybe make it indispensable for travelers again. And finally, the Fork's continued expansion in the $250 billion European restaurant market offers a steady and growing revenue stream that often gets overlooked but contributes meaningfully.
Right, those are the potential upsides. Of course, no investment is without risk, especially with a company undergoing such a significant strategic shift. What are the key risk factors our listeners should be keenly aware of for TripAdvisor?
There are several, and they are significant. Definitely weigh these. Stock-specific risks include the ongoing revenue decline in brand TripAdvisor. At -8% year over year, that represents a considerable near-term concern. It's still their largest segment by revenue. There's also inherent execution risk with their complex transformation strategy. Successfully pivoting a company of this size and legacy is incredibly challenging. Don't underestimate that. And as we discussed, the high leverage from that 1.97x debt-to-equity ratio limits their financial flexibility to, say, pursue further acquisitions or weather unexpected downturns. Now, on the broader sector and macroeconomic front, travel is a discretionary spending category. That makes it highly sensitive to economic downturns or consumer spending pullbacks. If people tighten their belts, travel is often one of the first things to get cut. And the intensifying competition from Google, which benefits from superior data and integration, well, it continues to pose that significant, perhaps existential threat to TripAdvisor's traffic and monetization. That hasn't gone away. Lastly, potential changes in online travel regulations, data privacy laws, or antitrust enforcement could impact their operations significantly. Regulatory risk is always there.
Okay, so considering everything we've just unpacked, the financials, the segments, the competition, especially Google, the valuation, the technicals, and all those risks and catalysts, what does this all mean for our listener, the one asking? Is TripAdvisor a good time to buy right now? What's the bottom line?
Well, overall, our sources suggest a hold with cautious optimism, giving it a 4.8 out of 10 rating. So lukewarm at best. TripAdvisor presents a complex investment opportunity. It seems best suited for patient, risk-tolerant investors, investors who are looking for exposure to the post-pandemic travel recovery and, more specifically, that growing experiences economy. While the strategic pivot toward experiences through Viator shows genuine promise and it's undoubtedly their strongest path forward, the timeline for this transition and whether it can truly offset the declines in the legacy business remains pretty uncertain. It's really a bet on potential, not a sure thing by any means.
So definitely not for those looking for quick gains then. Short-term traders should probably steer clear.
Correct. For short-term traders focused on, say, a 1 to 3 month horizon, it's explicitly not recommended, mostly due to those overbought technical conditions we discussed. If one were dead set on entering, a suggested stop loss might be around $15.50 to limit the downside risk, with maybe a take-profit target of $19 to $20 if momentum somehow continues upwards. But again, the technicals are flashing caution signs right now.
And for our listeners with that longer-term view, say 12 months or more, what's the approach there?
For long-term investors, it's cautiously positive, particularly for disciplined value investors who understand the turnaround story and are willing to wait. We'd suggest a maximum position size of maybe 1 to 3% of a diversified portfolio. Definitely don't overcommit here. And considering dollar cost averaging on any pullbacks, especially below $16, would probably be a prudent strategy. Build a position slowly. The best entry price range, ideally, appears to be somewhere between $14 and $16. That represents about a 12 to 20% downside from current levels, offering a better margin of safety. It really is about patience and conviction in that pivot story.
That's a very clear breakdown. Thank you. So what are the absolute key monitoring points for anyone holding or considering TripAdvisor in their portfolio? What should they be watching most closely going forward?
Okay, key things to watch. Keep a very close eye on the Q2 2025 earnings. Look for not just revenue growth, but specifically for accelerated revenue growth and any signs of margin improvement, especially from Viator. You absolutely need to watch Viator's performance. Look for sustained double-digit growth and a clear path to profitability. It has to be the engine driving things. Crucially, look for evidence that the core brand TripAdvisor's revenue decline is finally bottoming out or, even better, stabilizing. That needs to stop bleeding. Monitor their competitive response, particularly the effectiveness of those AI initiatives in attracting and engaging users. Are they working? And always keep an eye on the broader macro environment for travel demand resilience. Are consumers still spending on travel experiences, or are they starting to pull back?
This has been an incredibly insightful deep dive. It really feels like TripAdvisor's future success truly hinges on its ability to accelerate that tricky transition. Moving from that legacy review platform to a comprehensive experiences marketplace, all while trying to defend its core advantages against formidable rivals like Google, who seem to be constantly encroaching. For you, our listener, the provocative thought to carry away today is this. How much does the promise of a rapidly growing market like online experiences genuinely outweigh the deep-seated challenges of a declining legacy business in an increasingly competitive and disrupted landscape? What does that specific balance mean for your investment thesis today? Think about where you place your own bet on that strategic pivot.